Welcome back. I'm Pratap here. Today is 30th March 2024. In this video, let us analyze Bank Nifty with the help of supply demand zone chain, NeoStock Software's supply demand zone chain. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept all the training videos in a playlist, supply demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page. Then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be useful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into analysis of Bank Nifty with the help of NeoStock Software supply demand zone chain. So it is a detailed analysis video. So let's start our analysis starting from the monthly time frame. So we already generated the chain for monthly time frame in Bank Nifty. Already we are having a demand zone having a leg-in date on 1st August 2023 and having 3 base candles. So let's draw the zone. So this is the 1st August 2023. We have 3 base candles. So let me draw the zone. And this is a monthly demand zone. And also, you should observe this monthly demand zone is having monthly EMA confluence. And moreover, the prices are moving within this monthly area for the last 3 months. That means at present Nifty is moving. Bank Nifty is moving in a specific range. That you will understand once we look into lower time frames. And also one more point, Bank Nifty is not having any supply zones. That means this monthly demand zone is a all-time high monthly demand zone at monthly time frame. Now let us change it to weekly time frame. And also let us generate the chain for weekly time frame. So I am changing the time frame monthly to weekly and generating the supply demand zone chain. So this is the most recently available weekly zone, supply zone, and this is the most recently available weekly demand zone. That means Nifty is having, Bank Nifty is having both demand and supply zones at a weekly time frame. So let's draw both the zones. First let me draw this demand zone. This is a high liquidity demand zone. Already tested once. But my high liquidity zone supports multi-testing. So this is a weekly time frame. So when is the leg-in? This is on 30-10-2023. After that we have 3 base candles. 30-10. So this is the one. So we have a leg candle. After that 3 base candle. Sorry, just a minute. Yeah, it is 30-10. This is a weekly demand zone. And moreover, it is a high liquidity demand zone, weekly demand zone. Okay. So then where is the supply zone? It is created on 26th December 2023 with 2 base candles. 26th December. Yeah, this is the rally candle, 2 base candles and a drop candle. So let us draw the zone. So this is weekly supply zone. So now here in this demand zone we get a strong support in case if bank nifty prices are down up to this area, in this area it will get a strong support. I am using the word strong support mainly because it is a weekly demand zone. If you further fine tune this zone up to 5 minutes level inside this area, you will understand the real order flows inside fine tuned zones. You already learned fine tuned 5 minute zones in the chapter lesson 16 in our training program. Zone confluence, how to fine tune the zone, I already explained to you. So everybody should remember, and it is your responsibility to fine tune this zone. I am handovering this work to you because you people already practiced a lot about that. And every day high liquidity zone analysis videos, every day we are doing fine tuning the zone. If you might have, if you might be listening those videos, by this time you would have been an expert about fine tuning the zones. So please do this work and identify the order flow inside this zone. In case if Nifty is down up to this area, you will get a very good opportunity. Especially you will get a WIT trade opportunities you will get, weekly income trade. And also remember one more point. This weekly zone is overlapped inside the monthly zone. That is even a powerful concept. And moreover, this is a high liquidity zone, weekly zone. So now we have drawn weekly demand zone is a high liquidity zone and weekly supply zone is a normal supply zone. But is this supply zone good or is it going to be violated? If you want to know that, you have to fine tune this zone. At 5 minutes level, if you can identify a fresh 5 minute zone, probably this zone will work and maybe it will again push the prices down. Because you already learned when a zone will be violated in our training course. We have analyzed all the scenarios when a zone will be violated. In case if anybody without listening the training videos and listening this video, first you go to the training lessons, complete all those important lessons. Moreover, I recommend you attend starting from lesson 1.1. Because every lesson you will be learning new points. Okay, now let me generate the next time frame daily. Let me generate the daily chain. Before that, let us change the time frame here, daily time frame. Okay. So what is the immediately available daily supply zone? And also what is the immediately available daily high liquidity zone? Those things we need to look. And similarly, immediately available daily demand zone and immediately available high liquidity demand zone. Those things we should mark. So the immediately available supply zone is item number 4. This is the most recent daily supply zone. Let's draw this daily supply zone. This is not a high liquidity, this is a normal supply zone. So when it is created, 6th March 2024 and 11th March, we have a leg out, one base candle. So 6th March. So this is the one. Here we have a daily supply zone. So let me add the text. And what you have to do? What is the work you have to do? Fine tune this daily supply zone up to 5 minutes. This is the work you have to do. And identify the order flow inside. If the order flow is very good, definitely if Nifty get into this area, you can go for a short. At least intraday return it will give. A minimum at least. or you may even get a DIT return also you may get. Daily income trade, that is short term income trade. So that way you can plan. But only thing you have to do, you need to fine tune this zone up to 5 minutes. I'm giving that work exercise to you guys. You have to do that. You may ask why I'm not doing this fine tuning work. That is your work. I already explained in our course. The only reason I am drawing this chain is because this chain will be helping us to identify the support and resistance levels. For this week, how how Bank Nifty is going to behave. But whatever the exercise work I am giving, you have to do that work. I already told you, you need to fine tune the weekly high liquidity demand zone. You need to fine tune weekly supply zone. Already weekly supply zone we have drawn. Daily zone up to 5 minutes level you have to do. Okay, this is the immediately available daily demand zone. What about immediately available daily, this is a daily supply zone. Then what is the immediately available daily demand zone? Maybe this could be the one. Drop, base, rally, looking very excellent, but let us check here. Because it might be hidden zones might be here. Okay, the immediately available demand zone is item number 5. This is a 26th March and 28th March. March. I think it has considered this as a ERC candle, but okay, anyway, because software way of identifying the zones is different compared to the human way of. So this is a leg out, no doubt. So I am considering this is a leg in, and these two are the base candles. So this is the immediately available daily demand zone. So let me add the text. So these are the immediately available. So probably this week you may see some movement within this area. There is also possible one of these zones will be violated also if there is no fine-tuned 5 minutes fresh zones inside this. You need to identify in this daily demand zone and daily supply zone the fine-tuned fresh 5 minute zones. That way we can confirm whether the zone will work or it will be violated. So after that there is one more demand zone here, 28.2. This is the one. Drop, base, rally. Let me draw even this one also. And this is already tested. Last week actually what we did, we fine-tuned this zone. Couple of opportunities it has given. This is one area it gave an opportunity. This is one area it gave an opportunity during the intraday when we fine-tuned this zone. I think still there is one fresh 5 minute zone, fine-tuned zone inside this. Please check that. And where is the high liquidity zone? The 7th. 17 level and 29, 6 base candles and 29.11. So when is this? 17.11. This is the one. We have a hidden body. We have 1, 2, 3, 4, 5, 6. Again weekly I made a mistake, I think. Let me go to the weekly ones. I'll come back. This is a weekly zone. How to draw up to here? I think I remember last time also I made same mistake. Okay, daily. So inside weekly we have a daily. This is a daily zone, is a high liquidity demand zone. Let me mark. This is the daily high liquidity demand zone. This is when we get into this demand zone related things. Now what about supply zone? Any high liquidity supply zone available? There is one more supply zone a little above. I think this is part of this daily. Everything is part of this. So let me draw this high liquidity zone. 15.1, 17.1. Actually, this is the main source. Actually, all these are all LOTL zones. For supply zones, all these are all LOTL zones. The main zone is from here. 27.12, 3 base candles. This is the one, 27, 3 base candles and a drop. This is the main high liquidity zone. See, all these are all LOTL zones. This is the daily supply zone. And a daily high liquidity supply zone. Okay, this is the picture till the daily time frame. And your responsibility is you need to fine tune the immediately available demand zone and immediately available supply zone. Now prices entered into the daily zone. There are higher chances it will turn, this will be violated, and again it will come up to this next monthly zone. That possibility is there. Another possibility is also there. It will go and come back. Maybe there could be a strong order flow. Again it will push and it may violate this high liquidity zone, or even weekly supply zone also might be violated. That possibility is also there. See, we cannot rule out any possibilities. The only thing you have to do, when the prices reaches to our the fine-tuned zones, that is the place where we need to plan our trades. Or any high liquidity zones, that is the place. High liquidity zones at lower time frame, 5 minutes level, that is or 15 minutes level. That is the place where you can plan your trades. Your intraday trades are short-term income trades. Okay, now let's move on to the next time frame, that is 125 minutes. From 125 minutes onwards, we will draw the immediately available zones. Let's don't go very deep. Anyway, I'm showing you this supply demand zone chain. What you can do, you can pause the video. Any zones you want to draw below, you can further draw the zones. I will be drawing only immediately available. But you please draw the zones, because if any of these zones are, if any of these zones are violated, at least you should know what is the next zone. That's why make use of the supply demand zone chain report. So the number 2 and number 3 are immediately available supply and demand zones. First let me draw the high liquidity demand zone. When it is created on 27th March, 2 base candles, and 28th March we have a leg out. So 27th March 9:15. So let me go to 125 minutes time frame. So this is the one, 27 March 9:15, 2 base candles and again a rally candle. So this is 125. This is having a zone confluence with the daily zone. This is 125 minutes demand zone. I mean high liquidity demand zone. Next, what is the immediate supply zone? That is also high liquidity zone. When it is created, 7th March 9:15, after the 2 base candles. Yeah, this is the one. We have a drop, 2 base candles and drop. This is 125 minutes high liquidity supply zone. Okay, this is the immediate levels we identified. Now probably the price will be moving within this area during this week until one of these levels are violated. So this is a good range for Bank Nifty. Both are high liquidity zones. But remember, until one of these zones are violated, the movement will be within this area. In case if one of these levels are violated, what is the next level? That you please draw below whatever the zones are there. We have another high liquidity below. If this is violated, the high liquidity supply zone, above there is one more high liquidity. You please draw them. Because anyway, why I am not drawing every day, I am doing daily analysis. If anything is violated, the next day I will draw that. But for your trading point of view, the next level, because during the trading day, if it is violated, you should know what is the next level. That's why keep an eye on the item 4 and item 1. I mean serial number 1 and serial number 4. If possible, you draw them on your charts. Okay, now I am shifting to 75 minutes time frame. Let me generate the chain. Here I will change the time frame. Okay, chain is ready. Now here what is the immediately available 75 minutes demand zone and supply zone. The 6 and 7 are immediately available demand and supply zones. So what is the 6th one? See, 6th one is very strong. It already supported 2 tests. And 7th one is also very strong. It has given 4 rejections. So anyway, let's draw both these zones. This is the immediately, first let us draw immediately available demand zone. This is on 26th March 9:15, 4 base candles. This is the 26th March 9:15, 1, 2, 3. That means the same zone. The same zone. This is 75 minutes, comma 75 minutes. 125 minutes and 75 minutes. Both are same. Okay, fine. Then what about the is 75 minutes is a, no, sorry for my mistake. 125 is high liquidity zone. 75 minutes is a normal zone. Okay, 125 minutes high liquidity zone, 75 minutes normal zone. Anyway, we consider this as a high liquidity area because we already 125 minutes is saying. So what is the next supply zone? The 6th one, already tested twice. When it is created on 12/3, 10:30 candle, after that 4 base candles. This is the one. Drop, 3 base candles, 4 base candles and again drop. So let's draw this. Supply zone. 125 minutes supply zone. Okay, this is a 75 minute supply zone. See, last Friday, the orders are picked up from this zone, and the last minute of the trading session, the prices were down from this area. This is the zone holded the prices. Why it is holded? Because inside 75 we have 25 minutes high liquidity zone. Actually, the 25 minutes high liquidity zone holded all these prices. But inside 25 minutes, there are fine-tuned 5 minutes and 15 minutes high liquidity zones. Both are failed, violated. But the 25 minutes high liquidity zone holded and pushed the prices down. That we will see later. Now until 75 minutes we have completed. See now how it is narrowed down. Now the range is within these two levels, 75 minutes supply zone and 75 minutes demand zone for your Monday's trading point of view. This will be the range. If one of these levels are violated, then range will be changed. Okay, now we will generate for 25 minutes time frame. So let's go back, changing the time frame to 25 minutes, and I am generating the chain for 25 minutes. Now let us look for the immediately available zones. Sixth one is the supply zone and seventh one is the demand zone, and 25 minutes onwards we will focus only on high liquidity zones. But these supply zones, normal supply zones, you please draw them, because sometimes intraday they will work. Here my goal is not about your trade plan, intraday trade plan. My goal is about finding support and resistance levels. That is the main objective of this video. But when you want to plan your intraday trades, please make use of these normal zones our chain is providing. You have to draw them by using this leg in, base, leg out candle. You need to draw the zone on the chart. That way you have to plan. So here I have a high liquidity zone, the seventh one, that is the immediately available. When it is created, 27th March at 1350 candle after the two base candles. 27 March, 1350. That is within this 125-75 minutes area. This is the one. This is a 25 minutes demand zone. I mean high liquidity demand zone. This is high liquidity. See how it is getting fine-tuned, this zone. Inside the daily zone, we have a 75. Inside 75, again we have 25. Probably this could be 15 also. That we will check once we get into the next time frame. Okay, this is the immediately available high liquidity zone. Then next, what is the high liquidity? Here low priority high liquidity zone is there. Let us draw this also. This is a 12-3, 9-15 after the two base candles. Yeah, here 12-3, 9-15. This is the one. Okay, this is a 25 minute supply zone. You have one supply zone here, 28.3 and 28.3, 14.50, 13.50, 14.50. One base candle. This is a fine-tuned zone inside this. Good. You have a fine-tuned zone inside recently created on last Friday. Here there is a institutional order flow is there inside this 75-minute zone. Okay, now let's go to the, and one point I forgot to write here. This is a 25 minutes low priority HLQ supply zone. If I don't write these comments, you may get confusion after that. You might be thinking it is a normal zone, but this is a high liquidity zone. But among high liquidity zones, this is a low priority one. If there is a strong order flow, is there or not, you need to check. You fine tune the, see, always high liquidity zones, you need to fine tune up to 5 minutes level. There are some high liquidity zones, they looks very well at higher time frames. The moment you fine tune, there won't be any order flow and it will be violated. Actually, they are like traps. Institutions are setting traps and they want to divert our attention. In such a way, you will take orders and those zones will be violated. So that's why clearly I told you the technique, how to fine tune the zone up to 5 minutes. That is your responsibility, you have to do that. So now let's go to the next time frame, 15 minutes. Let us generate the chain and let me change the time frame also here. It's taking time. Okay, here what is the immediately available demand zone? 8th one. This is a high liquidity demand zone. Next, 7th one is high liquidity supply zone. Let's look into both. Probably they will be useful for our Monday's trading point of view. So first let us draw the demand zone here. Even below also you have demand zones, multiple. All are high liquidity. A lot of order flow is there for demand zones point of view. So 26.3 at 15 hours, one base candle. $26.3. Okay, this is the leg candle, base and rally. What is happening here? Okay, this is a 15 minutes demand zone. High liquidity demand zone. 15 minutes high liquidity demand zone. If you don't find a proper 5-minute zone inside this 25 minutes high liquidity demand zone, this will be easily violated. Then orders will be picked up from here. But here 5-minute zone again you need to fine tune. Then only you can say this 15-minute zone is good. Let us assume if the 5 minutes zone is not clear inside. Again this will also be violated. That's why fine tuning up to 5-minute zone is very, very important. That is the only way you will have a better trades. Okay, this is the immediately available one within this zone. So you please focus on them. And also remember the high liquidity zones before, in case if this is violated, the next one you need to focus. And also here 7th one is high liquidity supply zone. So when it is created on 28.3, 14 hours, 2 base candles. 28.3, 14 hours. This is the one. Friday. So that means this is 25 minutes supply zone is a 15 minutes high liquidity zone. 25 minutes is a normal zone, but 15 minutes is a high liquidity supply zone. That point you should not forget. So that's a good thing. Inside 75 minutes supply zone, we have a 15 minutes high liquidity supply zone. Definitely it will hold. At least you may get one trade. See, when it will fail, if Monday, if Bank Nifty opens with a gap above this high liquidity zone, then it will fail. There are higher chances. But otherwise, if the price is closed, many times, I am not saying always, many times prices reach and again it will come down. But there are rare situations. If the order flow, the demand is very strong, probably this high liquidity zone also will fail. But that is a rare scenarios. In that case, your stop loss will hit and you have to accept for that. You must accept for that. Okay, we have drawn 15 minutes level zones. Now let's go to the last time frame, 5 minutes. But remember, the supply zones above this high liquidity supply zone. If this is violated, probably prices will be picking the orders from the next high liquidity supply zone or immediate supply zones. So you have to draw them on your charts with the help of the supply demand zones. So now let me go to the last time frame, 5 minutes. So let us look into the immediate demand and supply zones. Yeah, 12th is the immediate 5 minutes demand zone, but this is already pierced. So pierced zones we don't look. Which is the not pierced one? 14th one. But below there is a 13th. This is a normal zone only. Let that you please draw. 13th one you draw on your charts for your intraday trade points of view. But our support and resistance levels point of view, let me focus on 14th. When this 14th is created, 20 March 15:15 after the 2 base candles. So when is it? 20 March. So it is there below. This is the one, rally to base candles. This is a 5 minutes high liquidity demand zone. This is only the immediately available. Above this we don't have any high liquidity zones, but there are some one more demand zone is there. So in the fine-tuned area, can you draw a zone here? Yes, you can draw a zone. This could be a drop candle, 1, 2, 3, 4 base candles. That way you can draw a 5 minute zone. So fine tune is possible here. This is the one, 26/3, 14:35. This is 27. Here you have 5 minute zone overlapped with this zone at the distal line. This is the one. This is a normal 5 minutes demand zone. Here we can draw, but software did not consider this 5 minute zone. The reason is because of these candles, the range is bigger. Software consider all these are all failed ERC candles. This is a failed ERC, this is a failed ERC. But okay, sometimes you can compromise and you can draw within this area. But this is a perfect 5 minutes demand zone overlapped with this 15 minutes high liquidity demand zone. See, earlier also it picked up the orders from this zone. From the 15 minutes candle, picked up the orders from this 5 minutes area. So what could be the range? For your Monday's trading point of view, your range could be from this daily demand zone to this 75 minute supply zone, or this 75 minutes. This is the first possibility. This is one range, and from here till this there is one more 15 minutes high liquidity demand zone just below, but all are within the same daily demand zone. That means within daily demand zone there are two order flows. This is what you can expect. If this 75 minute supply zone is violated, first of all, is there any 5 minutes order flow here? Yes, this is very excellent. We have a 5 minute zone, supply zone. But we made a mistake. I made a mistake, I'm sorry. We didn't draw 5 minute supply zones. We have drawn only demand zones. Here we have low priority and this is the high priority. Let us draw both. 11th one is a low priority supply zone when it is created on 28th and 28th 1420. After that 4 base candles. $14.20, 1, 2, 3, 4. Because this is a medium size candle also, it considered as a software point of view. But I am considering this is good enough to consider as a failed ERC candle or ERC candle. That way the real order flow we are identifying manually. Software point of view, this is the zone. But I am considering this is, but anyway, let me draw. You can take a decision later. This is a low priority high liquidity zone. 5 minutes. Low priority high liquidity supply zone. And there is one more high liquidity zone, 5 minutes high liquidity zone above this. Let's draw even this. When it is created on 12th March 10:30, after that one base candle. 12th March, probably here within this area. March 10:30. So here we have 5 minutes high liquidity zone. Okay, we have finished now. Now we got the better clarity. So these are the levels. If this demand zone is violated, below it will pick up the orders. Suppose if this one is violated, the next one, probably here we have a 5 minutes high liquidity zone just below this 25 minutes low priority high liquidity zone. Okay, this is the trade plan for our Monday's point of view. See, I'm not telling you which zone we are going to take the trade. That you have to fine tune these zones and find out. See, this is written up to 25 minutes. Inside you need to fine tune manually. If you feel there is order flow, it will work. If you feel there is no proper 5-minute structure, definitely this will be violated, and then prices will be going here. In that case, you should plan your trade here, not here. If you are very sure there is an order flow, a fresh 5 minutes zone is there inside, then only you have to plan. Fresh 5 minutes, a fresh fine-tuned 5 minutes. We should not miss the word fine-tuned. There is a difference between a fresh 5-minute zone and a fresh fine-tuned 5-minute zone. There is a difference. You know what is fine-tuned technique? I already explained. Like inside 75, you have 15 minutes. Inside 15 minutes, you should have 5-minute zone. That 5-minute zone is a fine-tuned zone. And that should be a fresh zone. If that is the case, mostly you have higher success rate in that zone. Otherwise, there are higher chances that the zone will be violated. This is what we've been discussing every day in our HLQ analysis videos, high liquidity zone analysis videos. And the same concept I explained in lesson 16 in our training program. Always remember, those people who find fine-tuned fresh 5-minute zones, in those zones only you will be having the maximum success rate. Remaining zones, their success rate will be less. So this is about Bank Nifty. Hope this analysis will be useful to you. You please further fine-tune the zones, whichever already I told you. And wherever some zones, high liquidity zones are left, see here 25 minutes is after that we didn't fine-tune. You have to do that. If any zone till 5 minutes we did not fine-tune in our analysis video, that is the work you have to do, because that is your trades. Those fine-tuned zones are your actual trades, and I am expecting you to do that work. So what I am giving here, I am telling you the support and resistance levels. This is the support level, first support. This is the first resistance. That is what I am saying. This is the second support level, and this is the second resistance level. That is what I am indicating. Hope you got the clarity. So let's take a break here and let's continue with our next video. Hope this information will be useful to you for our further study and analysis. Let us all meet again in our next video. Thank you.